Good morning and welcome to Charting Markets on Friday, the 1st of December. November has been an extraordinary month for equity markets, with the S&P 500 rising the most since 1980 and seeing its strongest gains per month since the beginning of this year. And in Asia earlier this morning, this positive mood didn't really take most Asian equity markets higher. Some of them did, but others, such as the Hang Seng, actually hit a new one-year low. So not all equity markets globally are looking on the bright side at the moment. Now, if you look at the FTSE 100, it's right in the middle in that it is greatly underperforming the US indices and also several of its European competitors, and is more or less flatlining year to date. And if you look at the daily financial bet of the FTSE 100, you can see that we yesterday dropped down to 7,383, but are now bouncing back up again and seem to have gotten some new impetus to the upside here, as we saw weaker Eurozone inflation data, weaker than expected actually, coming in yesterday and pushing equity markets in Europe higher. Now here the upside target is the November high at 7,535. And also, as you can see here, the red line, the 200-day simple moving average at 7,577. These are the next upside targets for the FTSE 100. And I do expect further upside to take us then also to the September to December downtrend line, which currently can be seen around 7,622. So finally, the FTSE 100 seems to be getting some upside momentum here, having treaded water over the last 2 weeks. And it looks to me as if further upside is in store for this index, provided we stay above this week's low at 7,383. And the story is even more starkly seen with regards to the DAX 40 contract. As you can see here, the German stock index is just really extending its rally to the upside and is gunning for the 16,532 high seen back in July on this daily financial bet, as Eurozone inflation data and also German inflation data came in weaker than expected, and as rate cuts, potential rate cuts with regards to next year are being brought forward with regards to the timing of those happening. And all of that has led to a stark risk on sentiment for the DAX 40, which is really outperforming its European peers here, as you can see very clearly, an acceleration to the upside. And there is no technical reason for us to think that this rally won't take us to the July high before year end. Now, on the way up, we do have some resistance. We are currently in the process of breaking through the mid-May high, 16,333. But we also have the mid-June high at 16,428 to contend with before we can reach this July peak at 16,532. But here, basically, provided we stay above the steep uptrend line, and more important, the last reaction low, that's to say a low in the daily candlestick, which is lower than the one to its left and to its right, and that was made on Tuesday at 15,913. Provided we stay above there, further upside is in store for the DAX 40. And as I've just mentioned, the S&P 500 has now had a very positive November month, taking it all the way up to 4,587, very close to its July peak, and did so as the PCE core inflation data and also the PCE inflation data out of the US yesterday came in as expected at 3%, and that is the Fed's preferred inflation gauge, and therefore risk on sentiment was once more on the cards. Now, with regards to US markets, we are seeing a loss of upside momentum. As you can see here, the candles are becoming much smaller, much less volatility being seen compared to the DAX 40, for example, but the uptrend is still very much intact and will remain so whilst we stay above the last reaction low, that's to say yesterday's low really at 4,537, provided we stay above there, further upside could actually take us in the next few days to this July peak. Now around it, we may see some short-term momentum stalling here and perhaps some sideways trading being seen as we see US yields, which have dropped very sharply over the last week, are now starting to stabilize. Now, if we were to fall through this low seen yesterday on Thursday at 4,536, we've got some support also coming in at the mid-September high at 4,516, and then also around the 4,500 area. But to be frank, the odds are still looking at further upside being seen, even though we have been overbought since the middle of November. When you look at the relative strength index here, we're trading above the 70 mark. Since mid-November. So yes, upside momentum may be on the wane, and we may see shorter term corrections going forward once we've hit this July high, but short term, that is still the upside target for the next few days. The US dollar, after having had a pretty dismal week, is starting to stabilize, and we've got some Fed speakers out today, and those might give us a little bit more color on what the likely monetary policy is going to be in the upcoming month into the beginning of next year. And on the flip side, for the euro, we've got ECB members also speaking today. And we can see here euro dollar coming off its 3 months high at 110.17 on this daily financial bed, which was made earlier this week, and falling through the November uptrend line here. So yesterday we closed below it, which technically does indicate that we could see a short-term consolidation take us back down again towards the red line here, the 200-day simple moving average at 108.20, and slightly above there we also have the July low at 108.34 as a potential downside target. Now that area may well hold then the currency pair. As long as it does, we still have an uptrend in place, and we could then over the coming weeks into year end actually rally and rise above the 110.17 high we saw earlier this week, and perhaps retest the 10th of August high at 110.65. Now, if for some reason we were to fall through 108.20, the 200-day simply moving average here, then the corrective move that we're seeing may actually be a bit deeper and may take us back down again towards the mid-September high at 107.69, perhaps even all the way down again to the late October high at 106.95. So we've got a pretty good support area in that sort of zone. But short term, at least, we are seeing a minor top forming here with regards to euro dollar, as the US dollar and US yields are regaining some of their recently lost ground. The story is quite similar with regards to the British pound against the US dollar, in that we have risen to this 3 months high at 127.33 earlier this week, and are now currently testing the November uptrend line, which so far is underpinning the currency pair. And if you look at it here, if we were to fall through Thursday's low, that's to say yesterday's low at 126.04, we may then head back down again to the late June low at 125.91, which might offer minor support ahead of the 125 zone here, and also in red the 200-day simply moving average at 124.72. So short term, yes, a consolidation being seen, which is pretty normal because we've seen a pretty strong uptrend here over the last few weeks. I don't think that this is the end of the uptrend, by the way, provided we stay above the 200-day simple moving average. And if we were to at some stage take out the 127.33 high, the next upside target would be the high going back to basically June of this year, and also to the 10th of August between 128.19 and 128.48. Another currency pair which is kind of interesting is the US dollar against the Japanese yen, because here what we've seen over the last few days is a decline from a high which took us back, if I go onto the weekly chart here, to its previous multi-decade high seen in October of 2022 at 151 yen and 95 sen, and that acted as really stark resistance here, as you can see, and led to our third consecutive week of falls, which we are currently seeing here with regards to dollar yen. And this corrective move lower is likely to have short-term ended, though, because you can see here that the low made this week at 146 yen and 68 sen has actually led to a minor bounce back, and that could take us to the 1 month resistance line currently coming in around 148.65. And then above there, we also have the 200 days, the orange line here, the 55-day simply moving average at around 149.41, which is a potential upside target for the days ahead. So basically, as long as we stay above 146.68, the US dollar is likely to appreciate against the Japanese yen. Now, the fact that OPEC Plus met yesterday was a postponed meeting with regards to it having originally been scheduled for the 26th of November, so for the last weekend. And at this meeting, the discussion was very much about further voluntary output cuts in the first quarter of 2024, which were actually agreed to. The OPEC Plus committee basically said that they would cut collectively output by another million barrels, I should say, per day. From January onwards, but the individual OPEC Plus members countries haven't really come up with their outputs yet. So therefore, the oil price was quite volatile and actually didn't rise as much as investors were expecting, as we can see here on the WTI chart, because we basically just failed marginally below the mid-November high at $79.66, and have then basically had a reversal pattern take us back down towards the $75 mark here, and back, actually, interestingly enough, below the red line here, the 200-day simply moving average at $77.95. So we can basically see here that investors are not so sure about OPEC Plus, and don't forget that we will also have Brazil joining OPEC Plus next year, and Brazil is apparently going to increase its output by 3.4 million barrels a day. So this supply, the oversupply amid a global demand decline that's been seen, could lead to lower oil prices going forward, despite some countries such as Saudi Arabia cutting its output voluntarily by about 1 million barrels a day, and Russia also doing so by about 300,000 barrels a day. So from a technical perspective, what we can see here is that we have a short-term support line here, as you can see, which is currently holding the oil price. And if we were to fall through it, though, and through yesterday's low, that is to say at $75.10, we may then slip further towards the recent lows we've seen around the 22nd of November at $73.83, and perhaps even get back down again towards the mid-November low at $72.38. From a technical perspective, what we're also seeing is that we are actually in a downtrend at the moment. We are now trading sideways, but as long as we stay below the $79.62 high from yesterday, and that from mid-November at $79.66, the odds seem to be pointing towards further sideways trading with a slightly negative bias. Now, despite the price of the US dollar stabilizing, the gold price hasn't really come off. As you can see here, we are still trading close to the $2,050 per troy ounce mark, which was tested on Wednesday when we rose to $2,052 per troy ounce on this daily financial bet, as you can see here. And since then, we've basically just traded in a very low volatility, low volume sideways trading range. But if we were to break above the $2,052 high, which looks pretty likely given that we've had a very strong ascent since the beginning of October, then we would be heading back up again towards the highs seen back in 2020, 2022, and also in May of this year, between $2,070 and $2,082 per troy ounce. And as you can see here, the gold price is on track for a third consecutive week of gains, even if short term we may see a little consolidation over the next few days. from a technical perspective, this trend is still very much intact as long as we basically stay above the last reaction low. That's on the 20th of November, that low at $1,965. That is pretty unlikely to be retested anytime soon because we've got really good support here coming in between the October high and also the 21st of November high between $2,009 and $2,007. And then we've got the psychological $2,000 mark and also the high seen back in July at $1,987 per troy ounce. So all of which should really offer really good support in case of minor retracements lower being seen in the gold price. So further upside basically still being in store for this precious metal. Now, last but not least, I'd like to also mention natural gas prices. These are US natural gas prices. As you can see here, we've been trading in a downward trend since the beginning of November and are approaching the red line here, the 200-day simple moving average at $2.71. And around there, we may find short-term support together with the September low at $2.63. But the trend is your friend. That's still pointing lower. And if these levels were to give way in the next few weeks, we may actually slide all the way back down again towards the lows seen back in July and also in August of this year, which were made around the $2.48 mark. Thank you very much for joining me, Axel Rudolph. Please feel free to follow me on X. My handle is @AxelR_IG. Have a lovely weekend.